Cryptocurrencies have become a new sensation. If you don't own it now, you probably had traded with it in the past, but you most definitely have heard of it. It has become part of the fiscal world as it wrestles control from the authoritative tendencies of governments. But governments have come up with a quick solution: central bank digital currencies, or CBDCs. Are they reliable? Are CBDCs the new fiat? How has the crypto revolution reshaped the world? Let's find out. Don't forget to like, share, and subscribe to our YouTube channel so you can keep your finger on the pulse of the world around us. The rise of cryptocurrencies. Cryptocurrencies have developed over a short period from digital novelties to trillion-dollar technologies that can upend the world's financial system. In addition to being used as currencies to purchase a variety of products and services, including software, virtual property, and illegal substances, Bitcoin and hundreds of other cryptocurrencies are becoming more and more popular as investments. According to their supporters, cryptocurrencies are a democratizing force that is taking control of money creation away from so-called do-gooders like Wall Street and central banks. But the absence of regulation for cryptocurrencies strengthens terrorist organizations, criminal groups, and rogue nations, while the assets themselves fuel inequality, experience extreme market volatility, and use a significant amount of electricity. Around the world, laws are very different, with some governments supporting cryptocurrencies and others restricting or completely banning their use. To counteract the cryptocurrency growth, 114 nations, including the United States, are considering launching their central bank digital currencies as of February 2023. The evolution of CBDCs. Cryptocurrencies are exchanged on decentralized networks using virtual wallets and blockchains and cryptography principles, preventing duplicates and eliminating central authority validation. Now, governments seek to provide digital currencies. But who started CBDC? The Bank of Finland introduced the Avant Smart Card, an electronic type of currency, in 1993. Although it was subsequently abandoned until the early 2000s, the system is regarded as the first CBDC in history. The CBDCs have already been introduced in 11 nations, including Nigeria and 10 Caribbean islands. Pilot testing in China has reached 260 million people and spans 200 use cases, ranging from e-commerce to government stimulus payments. Nigerian CBDC adoption incentives have been ineffective since its launch on 25th of October 2021. It lifted the access limitations in August 2022, making it unnecessary to have a bank account to utilize the CBDC. Then, in October, it gave discounts to those who paid for their cabs using the CBDC. However, neither effort was successful. Maybe because Nigerians have developed a healthy distrust for their government and would rather use cash, however weak it might be. Nigerians remain one of the biggest crypto markets in the world, with 33.4 million Nigerians using peer-to-peer networks, despite CBN prohibitions on cryptocurrency transactions. The top 5 African countries with the most cryptocurrency holders include Ethiopia and Egypt, with 1.1 and 1.7 million holders respectively, South Africa with 4.2 million, and Kenya with 4.5 million. Nigeria has nearly triple that of the closest, at 13 million crypto holders. The most well-known cryptocurrency by far is Bitcoin, which was developed in 2009 by the mysterious software developer Satoshi Nakamoto. Its market valuation is over $1 trillion, with an all-time high of $3 trillion. Many more have emerged in recent years, including Ethereum, the second most popular one. Unfortunately, Bitcoin has also been used by dissidents in authoritarian nations to raise money and get over government restrictions, including evading American sanctions on Russia. Bitcoin is frequently compared to gold and is viewed by many investors as a speculative asset to hold over time rather than use for payments. Because the supply of Bitcoin is eternally set, in contrast to that of fiat currencies, where central banks can increase at any time, some people view it as a hedge against inflation. However, several analysts question this claim as Bitcoin crashed during market turmoil in 2022. Even while many are connected to a larger initiative within the digital asset market, the valuation of other cryptocurrencies can be more difficult to understand. Several Latin American and African nations, as well as others with traditionally weak currencies, have seen a rise in the popularity of Bitcoin amongst populist politicians. El Salvador made history in 2021 when it became the first nation to recognize Bitcoin as legal cash. People can use it to pay taxes and settle debts. However, the decision sparked unrest. Politicians from other parts of the region have endorsed the concept. Which banks are using CBDC? The financial institutions taking part in the New York Fed test include BNY Mellon, Citigroup, PNC, TD Bank Trust, US Bank, and Wells Fargo, as well as MasterCard and SWIFT. According to the United States Law Library of Congress, 8 nations – Algeria, Bangladesh, Egypt, Iraq, Monaco, Nepal, Qatar, and Tunisia – have banned cryptocurrencies, while dozens more have attempted to limit the use of digital assets. However, most countries have so far adopted a quite constrained strategy. The digital yuan may undermine the dollar's position as the preferred international reserve currency and give Beijing greater control over its citizens and economy. Citizens opening accounts directly with the central bank would be one option to introduce CBDCs. Governments would be given strong new tools to manage the economy in this way. For example, stimulus funds and other benefits might be credited to people directly, and the backing of the central bank would make CBDCs a secure digital asset to possess. However, their introduction could also lead to new issues because they could consolidate a tremendous amount of authority, information, and risk in one bank, thus compromising security and privacy. Experts warn of the risks in replacing commercial banks with CBDCs as intermediaries, as they play a crucial economic role in credit issuing. Central banks must discover new ways to pump credit or make borrowing easier, which may not be possible. But recently, cryptocurrency just scored a major victory in the courts of law. Ripple SEC lawsuit. A US judge ruled on Thursday that Ripple Labs Inc. did not break federal securities law by selling its XRP coin on open exchanges. This was a significant legal victory for the cryptocurrency sector and caused XRP's value to skyrocket. Figures show that Thursday afternoon alone, XRP had increased by 75%. The decision by the US District Judge Annalisa Torres was the first victory for a cryptocurrency corporation in a case brought by the US Securities and Exchange Commission. The SEC's ruling on Ripple's unregistered $1.3 billion securities offering, which involved selling XRP directly to knowledgeable investors, may provide evidence for other crypto companies fighting the SEC's authority. Thanks for watching this video. Don't forget to like, share, and subscribe to our YouTube channel. Stay tuned.